John, we're back, and this is a special insider edition because we are going to open this one up to the public.
Yeah, a little preview.
Just a little preview of what we normally do on the Insider, much more casual, much faster because the market's going to open very soon here.
Yeah, we'll get some info out there.
Let's start with crude oil though, because back around the new year, we were talking about how the spreads were inverted despite oil getting crushed. Well, not really crushed, but it was negative just about every day.
In the 50s minutes.
And now 66 and a half, 66.40, something like that this morning. It's been going up. And I was curious, do you think all this stuff with Venezuela now is going to change that?
No, it doesn't seem like they're going to be able to, change it overnight. I mean, there's a lot of infrastructure stuff they got to deal with. The oil companies didn't want to take over. I think Chevron went down there. But they were inverted on the way down, which is an unusual pattern. And we'll get to why this is important for the grain. So, meaning the front contract was more expensive than the next contract. You wouldn't think that on an oversupply. Like, generally, the price is coming down on an oversupply, and there's not enough demand up front. But the oil was being shoved down. And that's just the markets that we have nowadays. The funds start chasing momentum either direction. It was inverted on the way down, which, like I say, is unusual to see, which was a warning sign like, hey, this is probably not real to the downside. We were due for a pop if you were to believe what the spreads were telling you. It wasn't just 1 or 2 days. It was consistent the whole time on the way down. One of the clients wanted to short and be bear spread. And I kind of warned him it hadn't been working this year because it's a spread that he really likes and he likes to do. And I think it was short March, long June or July, but it wasn't working. He got in for a little bit and actually it worked a little bit, but it just wasn't the year. And it's very normal for like March to lose ground to June and all this stuff. But that wasn't happening this year. Stayed inverted, and now we popped. And why this is important.
Well, real quick, though, I mean, in that, from the crude oil side, too, that's a weird time of year for them to be inverted, too. Like, even if it is going to invert.
Yeah, and especially at a low price. It's just the whole thing was odd. And there was a lot of Middle East tension, and still oil hadn't been reacting. So it's hard to know what that's going to do. It seems like it likes this price better than the 50s, but what are we at, 66 or something like that?
Yeah, 66.
Yeah, so as high as it's been. Not that I'm cheering for high oil prices, but the spreads tipped a guy off. Now, why that's important, though, is into the grains will go, is because the grains are giving very similar warning signs, just the opposite. Corn spreads widening out, which we've been talking about, the March-May spread, meaning March under the price of May. As long as that -7, -8 held, it was fine. Last year, we went to -14 by the end of February, right before First Notice Day. And I think we fell to almost -11 here recently, at -10.5. So it's given up 2.5 cents. It's put 2.5 more cents carry in there. And this is important. It shows that either corn's moving into the pipeline, enough's moving into the pipeline, or they don't need it in the pipeline. One of the two. And if they don't need it in the pipeline, enough is getting sold. That's really bad news because a lot of people are still holding corn. So, in my opinion, old crop corn is in a lot bigger trouble than new crop corn. And it's even worse in soybeans. I think the March-May on the way up has been widening. Terrible sign. The exact opposite of oil. On the way up, we were looking more and more bearish. So everything looks very fragile in the grains as they add carry. And these are low prices. I mean, it's not good news at all. But we did have a little glimmer of good news with the Ag Outlook Forum this morning.
Yeah, just a quick point on spreads. Do you shift to watching the July-December at some point? Is the July-December on corn as important? I know
I liked it earlier, but I tell you what, we did talk about this yesterday. One guy thought, hey, then maybe next year they're really underplaying what corn could do. Is there? He was from Montana, and I hadn't talked to him in a little while. He was wondering, is there a corn spread that's going to work if corn, gets a weather scare, gets a little more bullish, with the new USDA numbers that we're gonna have out in a minute? And I said, yeah, the one that would move most likely is it's probably getting too late for July, December. That had a terrible end last year. I think it ended on the lows.
Well, it doesn't look good now.
No,
it's negative 16.5, which is not a good sign.
No, it doesn't look good at all there. That's widening out, and it doesn't really get past negative 20, but with all the corn out there, that one's not a good one. What you'd want to focus on is December 26 versus December 27. That's at like negative 15 or somewhere around there last I looked.
Negative 11 this morning.
Okay, so it's popped a few cents.
Moved a few cents.
Yeah, over this when beans have been rallying. That's normally at negative 15 to negative 20 before we plant. That's the old markets when it was kind of bearish. It would do that, but what's nice about that, it doesn't like to get a lot wider than that before mid-June. It can, of course, but it doesn't like to. So then you got kind of like this, well, I shouldn't say lower risk. You got this thing that you can sit in, long December, short December. So if it does take off, that spreads has a very good history of working and often gets inverted well over December 27. So that's where I was kind of pointing them. Now, I'm not saying run out there and do that, but you got to start think of what can I be getting into? And we've already gone over that. The calls are very cheap. And then that spread looks like that would be good. That would be a new crop spread, and versus the next year's new crop. And so you got a few different things that you can look at, and that's what you got to start planning for. If this does change, what do I want to get in? I'm not a big fan of the July, December. I'd rather be in December. But I don't like the way the carry is. I don't like the way the old crop's acting, and it didn't do very good last year. What happens is they know you have it out there, so they just simply wait you out, and then your neighbor starts panicking, he starts dumping, then other neighbors start, and then all of a sudden basis widens out, and you just ended up, for the last 2 years, just delivering at a terrible price in summer. One of these times, that's going to change, so I've been talking about it. At one point, we're at this crossroads where you got to decide, even with old crop, are we holding it? And then we're going to try to get a weather rally to get unload new crop on and old crop, or are you going to trickle it in because you got to make payments and you got to pay the bills to get the next one planted? Well, you have to decide what you're going to do with that old crop, because if you just kind of like, I might get rid of it now, I might get rid of it in May, you're probably not going to do really well. Because, like I say, likely it's to do with the last couple of years that have done. In your area, has it been good holding into June? And if it has been, maybe hold into June. But I would say the majority of the areas, that's not been a good idea, and guys have regretted holding in the summer. We're due for a change, though. We're going to have that bad spring or bad right. weather event that people have been lulled into this. That never happens anymore, but it will happen. And it probably won't be the same pattern. So it's just, you got to start planning what time frames you want to be holding all these grains into, because none of this is very bullish right now. But
let's hear that egg.
Yeah, we better
after that bright, shiny, sunny.
Well, this is what, because the news gets a lot better. We had 98.8 million acres of corn last year, and they're looking at 94. So big shift down. And I think we had 186.5 for yield. They're at 183, which puts us at 1.837 for ending stocks versus 2.1. Why is that important? It shows there's no buffer for problems. What we've had the last 2 years is no problems. So people start trading and hedging like that's the new norm, and everyone knows the weather is never the same every single year. So we're going to have one of these where it isn't. Everyone just assumes there's not going to be a weather scare. We're going to get 183 automatically. People tend to forget, you can have a couple hot and dry weeks forecast, and it can be damaging the crop to some degree. We don't know what it's going to be. And the market might assume it's not 183. Even in the end, if it is 183, at the time it might look like it's 178, and that might be the consensus. And then you're going to have a very sharp corn rally.
Yeah.
But you still need that weather scare. You need that enough to convince people that it's going to be well under 183. Because if you start going into the 170s, which it easily could be, then all of a sudden that number gets really interesting really fast. Now, we have this most years, except for last year when we planted near 100 million, where it's on the razor's edge because of our demand.
Yep.
Like one slip, and it's going to be bullish in corn next year. So that's why I've been saying, don't just give up on this, roll over on this at 460. I won't talk a guy out of locking that in if he wants to, new crop corn. But make sure you cover the upside to some degree, going into June. And then shortly after you do that, too, I wouldn't leave a big gap, because I don't think the options are going to get a lot cheaper than what they are now. I wanted that 470 for 12 cents in September. What one are you looking at for corn?
I haven't found a corn one that I like, to be honest with you. So
it feels like you can burn off some time, doesn't it? It feels like you're not. I'm not in a rush to buy calls right now.
I'm being super patient on that. I do like if you're gonna sell your corn, if you got to pay your bills, you're working with your banker, you got to figure out how what you're funding this spring. I think there's things you could look at. Then I would find if you want to have that upside open on what you just sold off.
Yep.
Or if you want to take this price and feel, we talked on Tuesday 10% or whatever of new crop.
Yep.
Maybe you want to have 10% in calls on that just because you think there could be something this spring. Your numbers matter.
Oh, yeah.
We can find something, but there's nothing that I love. There's nothing I'm racing out to buy, and I don't think that those numbers or anything changes in the next, I'm going to say 6 weeks just so it happens in 2 weeks, but
you forgot Trump could tweet.
Trump could tweet,
Yep.
but that 99% of that's going to be soybeans, isn't it?
Yeah, it's going to be biodiesel, and you have that decision coming up, and the action would be there. That's why beans are tougher. Like if I were making new crop sales right now, let's just say it's profitable in my area, and I am selling the 11.17 or whatever it was yesterday.
Yep.
And would I turn around and buy a call the next day? No, I wouldn't. No. But with beans, it's a trickier market. I mean, it could go a lot higher right now, but I would not be confident. So when we suggest these strategies, we don't mean we'll let you know what we mean with it. Like with the beans, it would be make sales now after it dips, which has been the cycle for beans, and everyone's given up on it. At that point, before the weather comes, look at calls, which would be right around mid-May, probably somewhere in there. If beans have set back, that's where I would be looking at buying calls right before summer. And then if it's for corn, that's a little different. Like you make new crop December sales, which I'm not suggesting to do at all. It's 460. We've gone over this. I think just giving up on this crop for 20 cents, because you could get 440 basically anytime you wanted, more or less for the last couple of years. So for 20 cents, you're giving up on 26. But if you do, I wouldn't leave a big gap there. I still wouldn't run out and buy it, which we just talked about at this second. But I would make some sort of plan. Like I have in my mind that I would like 470s for 12 cents. I don't know if we're going to get there. And when we get there, I'm not sure we're going to buy them because it might be there for a very good reason.
Right.
But anyway, that's what I have in mind. Just, try to time it to some degree because these are bear markets. Doesn't feel like you need to run out and cover upside and it's going to get away on you.
No, but you should have a plan. Like you say, you want those 470s at 12. When they get there, we're going to look at that and decide, do we want to do it?
Yeah, the plan.
Right.
And when I hang up, I'm going to call. One of the first calls I'll make today is a farm, and we're going to talk about the decision on old crop corn and new crop corn, what we're going to do, and then we're going to start planning. And of course, what we're talking about is going to be part of that plan. But what are we going to do with the remaining old crop, and what are we going to be looking for the new crop? What is going to be our plan? Because it feels like you do need to have that plan in place right now. Because if corn does go up, it's probably going to be fast on something we can't predict right now, and then it's going to be over that fast too. So you want the planning to be done because the way this is moving. Look at what just happened with beans.
Right.
You know what I mean? It comes out of the blue. These markets are a lot trickier than normal. The funds want to buy this stuff. They do, but there's just no reason to.
Yep. Yeah, I think having that, know what your numbers are and know what you're looking for, and then you can decide when it gets there. Does this look like that's continuing that way? Does this look like the best it's going to be? Because what we've seen consistently for the last at least year is the 3-day rally. I mean, you probably have 3 days to make decisions at good numbers.
Yep.
Realistically.
Yeah, and I just feel like these bear markets have beaten people down to the point where they're going with it now and saying these prices aren't coming up. These low prices are probably the best we're going to see. Like perfect example is corn at 460. This is probably the best we're going to see, and I better get going on that. That attitude hasn't been around for a very long time. It's this, we're going to have a drought, and then when it's $8, I'm going to, you know what I mean? And then every year it's gotten to be a little less the high water mark where they're going to sell. And now it's down to, everyone's giving up, and that's the cycle of the markets. It gets everybody on the wrong side before it turns. I'm not saying this thing's just bullish and it's going to blow up on you like 2020. What I'm saying is there's no room for error, and everybody's got already 183 plus in the bin for next year, and we're in the middle of winter here. You know what I mean? It's like they're getting ahead of themselves on the bearish side this year, where other years they were way too bullish and they didn't get bearish enough quick. Now they're getting too bearish too quick. Yeah. You know, assuming the summer is going to be just like the last 2 summers.
And it could be.
And it could be, and
that's
then,
why you need to.
And that's that's the ugly side of it that we didn't talk about. And I don't, what happens if it is perfect from day one again? These are going to be the best numbers that you're going to be seeing for a while, and that possibility does exist. Is it worth it to buy short dated, options into midsummer? I'm personally not recommending it. You can make an argument for soybeans though. Still, you give up 20, 30 cents to the bottom line. It doesn't make a lot of sense.
I would. I want to say this properly. I would recommend analyzing your options for soybeans right now.
Yeah. It's just I don't know. I don't want to spend a bunch of money on soybean anything. There's no margin for profitability there. I mean, it's just as bad as corn, and we go round and round with this. You don't want to just burn a bunch of capital when the actual opportunity gets there. You want to have that capital ready. Whether you're buying calls, whether corn went way higher and you're buying puts on corn, we don't know. It changes a lot going into spring and midsummer. So whatever it feels like now is going to be completely different here not too long from now. And it's so funny. Like finally yesterday, a little bit of drought talk started with that started making the rounds. I even posted the new drought monitor, but it's not like it's been the last few years where everyone's just, so-and-so out of the University of Iowa saying it's, terrible drought, and everybody's like counting on it. Like everyone's kind of given up on that. And
that's the way the market works though. I mean, you and I go back and forth on that. Like when everyone's showing the drought monitor, it's probably not the thing to look at.
Yeah.
When no one is, now I'm interested.
Yeah.
I want to watch that.
Yeah, you get to be contrarian in this business, and it's been very quiet. It's starting to get to be a little more vocal because in the Ohio Valley or a little bit west of that, it is awfully dry, and even here we're in the white, and we're west central Minnesota, right near the border of North Dakota and South Dakota. So it's shown all white for this whole area, and I don't think that it is. Like, you can't really tell in the winter, and lots can change. We went into the winter extremely dry for like the third year in a row, and there's not been much moisture over winter, and North Dakota's gotten a little more, but they dry out so fast. But it's just funny to see that everybody's white around here, which means just normal or no drought at all, and it isn't that way at all. So the drought monitor is actually worse than what it looks like.
Right. Yeah, it's hard to judge. I do know lake levels were down a little. Yeah. Fall fishing, it was harder to get the boat in for sure.
Yeah, one guy was digging a fence post of some sort, and he had obviously equipment in the winter. He said it was bone dry, just slightly under there, 3 feet down.
Wow.
So you hear these stories, but it's dry everywhere is what it is. There's not too much moisture anywhere at all, especially west.
That ended up long for an insider, John. The market's just open.
We're just, chit-chatting. Yeah, it'll be, here come the cattle calls. Every morning on the cattle open, the cattle calls come.